All right. Wonderful and beautiful, glorious day it is. Ladies and gentlemen, this is the day the Lord has made. Let us all rejoice and be glad in it. It's a, you know what it is, super Saturday. All right, it's Super Saturday. I'm your host with the most. It's YT on YT and IG. That's yours truly on YouTube and on Instagram. You feel what I'm saying? All right. And this is a weekly trade watch list from for the upcoming week, July 21st to July 27th. July 27th is very, very special. Not only is it my pop's birthday, but it's also my parents' anniversary. Okay, it's also my parents' anniversary. I cannot seem to keep up with how many years we've been married, but I know it's over 30, and I believe it's over 35. Right? So, yeah, absolutely. I know it's older than I am. I know it's older than me and my brother. All right. But yes, indeed, those are goals as far as being married that long to an individual. Um, I pray grace and happiness over their continued unionship. So not only strive to be able to stay in the marriage that long, as long as they have been. All right. So weekly trade watch list July 21st to July 27th for the upcoming week. This was a trade idea. It's the M15 on gold. Gold is my favorite pair, but all these candlesticks move the same. Simply being, um, gold simply created a divergence. It changed character right here. You see it says change of character below. And it left for order block, left imbalanced, right? Now what leads to a bearish change of character below is a distribution, redistribution that causes a bearish change of character below. That's why the market right here on the M5 time frame, that's why it accumulated, reaccumulated, came back up to this order block because this man was standing on one leg. All right. As I always tell people in my chat channel and on YouTube Live, hey, the candlesticks are a reflection of human behavior. Candlesticks are a reflection of human behavior. And excuse me, this is the H1 time frame. It's the 1 hour time frame, but I have the purple listed on the M15. That's what it is. All right. So it's things that I've noticed and documented, and that I've noticed and documented over the course of my time of my career in trading. That what happens in the market. Okay, so simply you've seen I had a horizontal ray, and I had an alert sitting right here, but the spread did not come and activate the alert. But I could show you how I threw this out as a trading idea in the Telegram, in our community Telegram chat. So right here in IOD signals chat, right here, IOD signals. I simply threw this signal out right here. You see it right here. Let me see. I don't know if it did. Y'all able to see it on YouTube Live. But hold on. Wait a minute. Let's see if y'all able to see it on YouTube Live. See if y'all able to see it on YouTube Live. One moment. All right, probably will be able to see it on YouTube Live. Uh, so right here, you can see how I threw this out as a signal 10:12 a.m. on July 17th. And see it's stamped at the bottom left hand corner 10:13 a.m. I said, hey, possible sales on gold. I drew it out, mapped it out. M15, right? Gold M15. This is on my mobile device. Now here's the deal. Here's the M15 on gold. Boom. What happened? It just didn't activate at our it didn't activate the alert, but it's still nice, dope sale to the downside. So what would have been TP1 for me is this imbalance right here. This imbalance right here would have been TP1. Okay. This right here would have been TP2. bam, and then we let the rest fall, and you can see how it melted. Okay. Now, there are things that happen in the market. You know, the market creates M's and W's. Okay. The market creates M's and W's. All right, and those are based off of harmonic patterns. Okay, the market creates M's and W's to create these long drops. Okay, now, excuse me. What I want to simply do is I want to show you all how the difference of how we knew how I knew this trade was going to sell, and the market leaves hidden clues. Okay, so right here, this orange is on the M5 time frame. Let's go to it. This right here is a divergence and a bullish change of character. Okay, so this right here is slanting lower. My people on IG, join me on YouTube Live. The link is in the bio. This right here is slanting lower. Okay, on the candlesticks. And on the RSI, it's slanting upward. It's doing the complete opposite like this on the purple line on the RSI, which is called the relative strength index. But when the market created a bullish change of character, which means it made an upward move, an upward change of character, the market did not come down to mitigate the demand zone that caused that change of character. That's how I knew that the market was going to sell, because now you have this imbalance that's unmitigated. The market created a reaccumulation, and now you got another imbalance that's unmitigated. You got this reaccumulation triangle right here. You got the market doing this, creating this reaccumulation triangle, and now you have another imbalance. You have two back-to-back bullish imbalances that are unmitigated. Okay, that are unmitigated. That led into a supply zone, which means the next market price cycle, the next market price cycle you're looking for is a distribution, which this is probably slanting upward like this, and on RSI is doing what? It's slanting lower. Now watch. Let's go to the RSI and confirm it. Right here, you can see, bam, hold up. I gotta remove this. Come down here with this. So, bam. Slanting lower, slanting upward. Midpoint, change character area. Okay. Let's see. This is a divergence. Slanting upward. Let's see. Not quite, but get the picture. Right, get the picture. But it's a distribution. Okay. And the market did what? Fell down, came back up, took this liquidity out, and then sold off again. All right, that's a gap. It was a gap in the market right here. So the market came back and filled that gap and then sold off. Now you got a fair value gap in between here on the M30. So now this right here, the break of this divergence, this pivot right here that pulled back to here, this is now called a what? A break of structure. You had your change of character back here, which means the market, when the market creates its first low, when it breaks its first low, it's called a change of character. Okay. Just like when the market internally right here, internal structure, the market broke its first high, it's called a change of character. Okay. But then when it makes a second low, it goes down, it created this low, comes back, and then bam, this is now called a break of structure right here on the M15. This is called a like that. Right here, I got my template say 15-minute break of structure below, just like this. So now I need to understand, okay, cool, where's my imbalance in between here? Because now I have an imbalance in between here. The market created a lower high and nothing came back to hit this area. You see clearly right here, this little small consolidated area, nothing came back to hit this area, right? So now, my personal beliefs, okay, market created a high, low, lower high, went down, distribution, redistribution, broke structure, created a new low. Now the market eventually has to do what? Come back bullish, okay, on a lower time frame. All right, the market eventually has to come back bullish and come back to one of these imbalanced supply zones, and it comes back to one of these imbalanced supply zones, and then the sellers will do what? Put a stop to the bullish internal move in order to do what? Push the market back down to create new lows. Okay, so this demand zone is taken out. You can see how the market created an M right in between here, right? Boom, broke structure, right? Was a point of interest, but you didn't get any confirmation that the bulls wanted to buy from here, right? Because it wasn't on discount enough. It wasn't on the price wasn't on retail enough. It wasn't cheap enough. Okay, it wasn't frugal enough. So bam, the selling was stronger. Boom, it's still in the premium. Boom, the price goes down. Okay, so we can get rid of this because that area of interest failed. Okay, this area of interest right here failed. Okay, this area of interest right here failed. Okay, so now probably look towards this area right here for the market to probably do something to it. But we can always go on the M5 time frame and look to see about structure. Because look, what do you have right here is you already have on the M5 time frame internal bullish market structure. You have internal bullish market structure. For the individuals that's watching me on YouTube, IG, I just suggest y'all come to YouTube. You're more than welcome to put your comments on the YouTube, and I can see them. Um, and I'll come back every now and then to be able to look at the comments. All right. So on the M5 on gold, we are bullish, meaning because you can see how the market did what? Went up, caused a change of character right here, right? So this low right here, this low, this orange, led to what? This high. The market reversed, tapped into a what? Demand zone right here, right? Tapped into a demand zone and then did what? Accumulated, reaccumulated, broke structure, created the high, right? So now you're gonna do what? You're gonna follow it and mark it up. Okay, cool. That's a brick structure. Cool. BOS, bam, above. Okay, this right here is a low. Bam, it created this high. Came back into the what? Demand zone, right? Bam, 5-minute demand. Okay, this one now is imbalanced. It needs to be mitigated. What the market do? Probably swept the liquidity a little bit, but it's okay. Now what's happening? The market has done what? Attempted to turn back up and go bullish. So you see how price came in, tapped into this imbalance, price pushed up, came back, retraced, respected it, and now what do you have? Price breaking this high right here, creating this high, price tapping in, and then the market doing what? Bam, breaking up above, breaking these highs right here. So now you're thinking, okay, cool. Is the market going to lead? Is the market on its way and going to lead to what? Another bullish breaker structure. We don't know until the market does it. Okay, is the market coming up here? Excuse me, to break structure once again, because we already confirmed that we are bullish on the M5 time frame on gold. Okay, we already confirmed that because the market created a upward breaker structure, right? This right here would be the change of character, right? Because this is the first high that was broken. This is the first lower high that was broken. This is called the change of character. The second, third, fourth, fifth, sixth, seventh, and so on are called BOSs, which are called breaker structures. Okay, but the first initial upward break or the first initial low break is called a change of character. So right here, you got this low led to what? It's supposed to stop if the seller's in control. It's supposed to stop right here. and lead to what? Another low. It's supposed to respect the supply zone. It did not. You can see that wick break up above this high, caused a change of character, led down to what? Boom. Came back into the demand zone. It respected it. This demand zone went back up. Boom. Caused a upward BOS. Came high. This came down. Boom. Now this is imbalance. You see the imbalance, right? The market respected it, right? Probably did a little bit, probably didn't, whatever, probably swept that liquidity right there. Boom. Now it's looking like what? Is attempting to go back bullish. It's attempting to go back bullish. Same stuff every single time. Same stuff every single time. Any questions, problems, or concerns? People on IG, I suggest you hop on YouTube with me. No, I have no audience on YouTube. Right, so this is a dope gold trade. Like I said, I sent the signal out, but I didn't take it because I wasn't able to be at my charts at the time that the market simply was in this area. All right, so what I'm going to do is I'm going to erase gold and mark it out all over again. It's going to be repetition, building that building that muscle, getting those reps in. All right, getting those reps in. So what I see right here, we have the market. The market came right here and went bullish. So this right here would be a breaker structure to me. Breaker structure, boom. So we have accumulation, we have the reaccumulation, and now we need the distribution. The distribution is going to start having to set in, okay? Because that's the market moves in market price cycles, okay? So the market moves accumulation, reaccumulation, distribution, redistribution, okay? Which means it's like this. Let me show you something real quick. Market moves like this. Where's my drawing tool? I need my path. Here we go. Low, high, higher low, higher high, higher low, higher high. The market may go down this low, it may go down this low. And it could do what? Pop back up and come back high. No, so yes, nah, they don't even have chimichangas. Crap. She's telling me on that one. We're getting food. It's my brother-in-law's birthday. Um, a chicken quesadilla in Texas. Got one moment. We gonna keep this on live too. I don't even know that's how you spell it, but that's how it's gonna be spelled today. All right, cool. We're back. We're back live with it. All right, so yeah, so the market moves, okay, low, high, higher low, higher high, higher low, higher high, higher low. Eventually it's gonna turn sideways and then go down. Yeah, but it's gonna have this, the market's price cycles are gonna print in the same exact sequence. It's gonna print in the same exact sequence. The market price cycle is gonna print in the same exact sequence. All right. So right here will be accumulation, reaccumulation, distribution, redistribution. Accumulation, reaccumulation, breaking structure, distribution, redistribution. Accumulation, reaccumulation, break of structure, distribution, redistribution. And if the market wants to respect this low right here, you look for an accumulation. That's exactly how the market prints. So now we're going to look at it via the candlesticks. All right. So this right here is a break of structure. This right here is a monthly BOS. Where's my arrows? Here we go. Boom. Break of structure. On the monthly, right? Monthly BOS above. Cool. Yeah. So what led to this upward break of structure above? Internally, you have a accumulation, which is this divergence and change of character on lower time frame. You have a reaccumulation that led to what? A bullish break of structure. So if you have a bullish break of structure, more than likely an accumulation and reaccumulation has been printed inside of it. The accumulation and reaccumulation market price cycles have been printed inside of the bullish break of structure before the bullish break of structure. Okay. Now, that's not saying that this can't be a reaccumulation, right? But right here, know for a fact that, okay, the market came right here, rested, decided to accumulate, right? And you can see the M. So I'm talking about M's and W's. So you can see the M literally from right here, right? See the M, and the market went up, broke structure, right? If I make this black, I don't even have a monthly harmonic pattern, but I'm about to make one right now. So it's black template, save as monthly harmonic pattern. All right, cool. Bet. That's how you save templates. I don't have to sit up here and change it black anymore. I can just go right click, template, and bam, weekly harmonic pattern. That's pink. 1 hour harmonic pattern. That's green. I already got these templates saved up because here's my whole thing. And what my coaches told me, because I'm also a state licensed life insurance agent in the state of Texas. And I was reading Eric Worre's GoPro. He told me, if you're going to do anything, be a professional. Be a professional. If you're going to be a Forex trader, futures trader, crypto trader, stock trader, be a pro. What do pros do? Pros track their progress. It's not, okay, let me get in for buys and sells. Let me get in for puts and calls. Let me get in for this and that. No. Pros document. Pros have documentation. Why is Tom Brady recognized as the greatest NFL player of all time? And he was a 6th round pick. His name went across the lead ticker at the bottom of the screen because he's a pro. What I now say in my videos, don't be one of many, be the one. Don't be one of many, be the one. Be the one that does the tracking in your progress. Because if you get super technical at this, you'll be that much more of a pro. This right here is called the Forex Trading Journal. Right here, about the first couple of pages, it says, discipline creates consistency. Consistency builds success. Good luck on your trading journey. You got a trading plan, trading checklist. What is your strategy for take profit? Describe your strategy. What is your strategy for stop loss placement and cutting losses, which we call lessons, because we don't ever lose. You got your weekly review. In the back right here, you have where you can document your trades. You got right here where you can journal your trades, which I am about to erase these 4 trades and start over because I haven't been being a pro. Okay. Be a pro at what you do. You gonna consider yourself a Forex trader, a trader, legit trader, and you possibly gonna be looking to teach the LOTs, which are leaders of tomorrow, your family, your friends, your loved ones. Be a pro. Document your stuff. ForexTradingJournal.com. No, I don't get no type of incentive or affiliate for recommending this trading journal. But forextradingjournal.com, it's about what, 25 to 30 bucks. Be the best 25, 30 bucks you ever spent. All right, document your stuff. Track your progress. If you want an elite physique, you have to track your progress. You can't just sit up there, oh, I'm gonna work out. I'm gonna just scarf down anything. I'm not gonna even track my calories, anything like that. You gotta track your macros in order to if you want to have an elite physique body, you want to go participate in that IFBB Pro All World Men's Physique next month or next year. You have to track your progress. You have to track it. You want to be a billionaire, you want to be a millionaire, you have to track your progress. You have to know your numbers. Know your numbers. Can't be a pro. Okay? So here's the deal. Boom. Let me get back to it. All right, bam. So we see the accumulation right here, bullish engulfing candlestick, reaccumulation, boom. All right, cool. We know a distribution is coming. No distribution is coming because right here on the smaller time frame, there's another bullish engulfing candlestick, but this whole thing, entire thing, is a reaccumulation. So you got your accumulation, reaccumulation right here, boom. So guess what? Now, what I'm going to do is this is going to be the first area of interest right here that the buyers can come into the market on a monthly time frame. So I'm gonna zone that off right here. All right, I'm gonna zone that off right here. Right. All right. So um, we can go to the weekly. Right now, you can see the distribution getting ready to lay in. You can see it. You can see the bearish divergence attempting to come into the market. You see the slanting upward, and I guarantee you on a weekly, it's starting to slant lower. Look at it. You see? I told you, it's all understanding up here. It's all in your head. No Fibonacci, no EMA cross, none of that. It's all in your head. It's all in your mind. Okay? As far as how market prints, it's all in your head. Okay? I didn't need the RSI to understand that this is about to happen. I just know it's about to happen. So now, what is this going to be? This is going to be. I'm on the daily now, and I'm about to close because I'm about to go get something to eat with my fiance, um, her brother, because it's his birthday. It's his 19th birthday. Happy birthday to him! Shout out to Max. Right. And so remove this. So now what I see is I see a distribution schematic. I see a distribution schematic. I'm live on YouTube. My people on IG. So here's the deal. This is what I see. I've been studying this for over 2 years, and I continue to study it, which is the elements of the Wyckoff method. So this is going to be the preliminary supply. All right, this is going to be the buying climax. Automatic reaction, since we're in a distribution. Secondary test. Minor sign of weakness. And this is going to be the upthrust. Okay. Market comes down to the demand zone, comes back up. Now this is going to be the UTAD in the test. UTAD right here. And now you're going to have a test. UTAD is upthrust after distribution. Okay. So if you were to study this on the Wyckoff method, I have also have an image right here. You'll be able to see it. You'll be able to see it. Let me see. Let's see if we can share it on YouTube. Let's see. Let's see. Forgot how I was able to pull it up. Oh, here we go. Window. There it is. All right, bet. Here we go. So right here, we're looking for a distribution. Right, we're looking for a distribution. Okay, so right here on the right hand side, we're looking at a distribution schematic number one. Okay, a distribution schematic number one because the price did this, literally did this. Preliminary supply, buying climax, automatic reaction, secondary test, understand the weakness, broke structure, up thrust, came back, respected demand zone, created UTED. Now we're looking for the test to go ahead and sell all the way down. This is what we're looking for. Absolutely what we're looking for. All right. So same deal. So now I want to go to the 4 hour time frame because I know there's an imbalance somewhere in between here. There's an imbalance. Let me go to the H4, see what it's looking like. Market's going to come back and respect one of these supply zones. I don't know which one. To be honest with you, I'll see we have a fair value gap right here. So now on the H4, what do you have? You have this being a high, this being a low, the market creating a what? Lower high, and the market doing what? Breaking structure right here on the H4 and creating a new low. So this right here is a BOS. So now you're looking for this as a supply zone for price to come back and do what? You need to get this area as supply. That's long term. So it's going to take a little minute for price to come back, go back right here. But I appreciate each and every one of you for taking time out of your business schedule. Listen to what I have to say. It's always greatly appreciated, and I will never ever take it for granted. Have a safe, blessed, productive rest of your Super Saturday. Know that I love you, and as I always like to say, God created us on purpose to fulfill a purpose. But more importantly, God has blessed with our name on it. All right? And I always say, don't be one of many, be the one. All right? Y'all take care, and I'll see y'all on the next live. All right?